Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AUTOLIV INC quarterly report. AUTOLIV Inc. provides a wide range of businesses and services to the automotive industry. These include passive safety systems plus frontal impact airbag protection systems, plus side impact airbag protection systems, plus pedestrian protection systems, plus steering wheels, plus inflator technologies, plus battery cutoff switches, plus seatbelts mobility safety solutions, plus connected safety services, plus safety solutions for riders of powered two-wheelers. The recent surge in AUTOLIV Inc.'s stock price can be attributed to a combination of factors. The company's record-breaking third-quarter earnings, with sales increasing by 5.9% and diluted EPS reaching $2.28, significantly surpassing analyst estimates, was a major catalyst for the growth. Additionally, strategic partnerships such as the one with CATARC and joint ventures in China have expanded AUTOLIV's presence in key markets. Strong financial performances throughout the year, including record highs for sales, operating income, margin, and EPS in Q2 2025, further boosted investor confidence. The company's reaffirmation of its full-year guidance and long-term growth targets, as well as the approval of a new share repurchase program, also contributed to the increase in stock price. Overall, AUTOLIV Inc.'s commitment to advancing automotive safety standards, expanding market share, and delivering strong financial results has driven the significant increase in its stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by net sales, which increased by $151 million in 2025 compared to the previous year. Additionally, organic sales growth was observed in various regions, including a 4% increase in Americas and Europe, and a 4.6% global LVP growth. Specific product categories such as airbags, steering wheels, and other sales also experienced growth, with inflatable curtains and side airbags increasing by 2.8%. On the other hand, revenue decline is attributed to several factors, including a decrease in gross profit despite an increase in net sales. Employee-related restructuring reserves and product-related liabilities also contributed to revenue decline, resulting in net changes in reserves of $25 million and $40 million respectively. Furthermore, negative effects from recalls, warranty costs, and unrecovered tariffs had a significant impact on revenue. Overall, the key drivers of revenue growth or decline are net sales, organic sales growth, and specific product category performance, while employee-related restructuring reserves, product-related liabilities, and negative external factors contributed to revenue decline. Net income and profit margins. A year of growth, the company's net income saw a significant increase in 2025, rising by 26% to $175 million. This growth was consistent across different periods, with a 27% increase from $404 million in 2024 to $510 million in 2025. The profit margins also showed improvement, with the operating income margin increasing from 2.8% in 2024 to 3.4% in 2025. The gross profit margin decreased slightly from 17.9% in 2024 to 16.6% in 2025. But this was offset by a 1.3 percentage point increase in the gross margin and a 1.6 percentage point increase in operating income as a percentage of sales. The net income margin is likely to have increased due to the rise in net income and stable revenue. The reasons behind these changes are attributed to organic sales growth, successful execution of cost reductions, positive effects from supplier settlement and compensation, and the ability to pass on most tariff costs to customers. These factors combined to drive the company's financial performance forward in 2025. The company is indeed generating positive operating cash flow, a significant improvement from previous years. The data confirms this trend, with various metrics showing an increase in net cash provided by operating activities. Specifically, the 9 months ended September 30, 2025, saw a substantial jump to $613 million, representing a 46% growth. This upward trajectory is expected to continue, as evidenced by the projected operating cash flow of around $1.2 billion. Management is optimistic about the company's performance in China, expecting increased outperformance in the fourth quarter. They plan to invest in building a second R&D center and forming joint ventures with local companies to drive continued success. The company aims to recover most of the tariff costs by the end of the year and remains confident in achieving an adjusted operating margin of 10-10.5%. A record number of new launches is expected to support sales performance in China. In terms of global strategy, management expects strong order intake with domestic OEMs in China to improve relative sales performance. They also plan to increase their manufacturing footprint in growth markets and build relationships with automotive manufacturers. However, they acknowledge the risks associated with developing countries, such as political upheaval and infrastructure reliability. The company's full-year 2025 guidance includes organic sales growth of around 3%, an adjusted operating margin of 10-10.5%, and operating cash flow of around $1.2 billion. Management is focused on operational efficiency, commercial excellence, and cost reduction programs to drive results. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. In terms of dividends, the company paid out a total of $337 million over the past 2 years, $173 million in 2025 and $164 million in 2024. Additionally, the company has also invested in buying back shares, with a total expenditure of $651 million over the same period, $201 million in 2025 and $450 million in 2024. Concerns about inventory buildup and supply chain disruption, the company's financial summary highlights 2 pressing concerns: inventory buildup and supply chain disruption. The data shows a significant increase in inventory levels of $113 million since December 31, 2024, indicating potential overstocking issues. Furthermore, the volatility in call-offs and geopolitical uncertainties have caused disruptions to the supply chain, posing risks to the company's operations and profitability. That concludes the financial summary for AUTOLIV INC. Feel free to comment below, and I will be happy to answer them when possible.